Former US President Donald Trump has stated he is willing to reduce tariffs on Chinese goods at some point in the future, but only if the trade deal between the two countries is deemed fair. This position reflects a strategic blend of openness and firmness, openness to easing economic tensions, but only under conditions that protect US interests. Trump's emphasis on fairness signals a broader concern over structural imbalances in US-China trade, particularly in areas such as forced technology transfer, subsidies for Chinese state-owned enterprises, and limited US market access. From a market standpoint, any hint of tariff reduction could spur optimism in equities, especially sectors heavily exposed to China like semiconductors, retail, and manufacturing. However, Trump's insistence on fairness injects uncertainty into the timeline and outcome of negotiations. This calculated ambiguity may also serve as a negotiation tactic aimed at preserving leverage while keeping investors and Chinese officials engaged. In the larger geopolitical context, Trump's statement reinforces the US shift from trade liberalization to economic nationalism, a shift that has shaped global trade alignments post-2018 and continues to impact supply chain strategies worldwide. President Trump has asserted that China's economy is deteriorating badly, a condition he believes is pushing Beijing to seek stronger commercial ties with the United States. This claim, while politically charged, aligns with recent macroeconomic indicators out of China: sluggish industrial production, declining property investment, and rising youth unemployment. Trump's framing positions economic weakness as a tactical vulnerability, suggesting that China's eagerness to negotiate stems less from diplomatic goodwill and more from economic compulsion. From a geopolitical lens, this line of reasoning reinforces the US stance that tariffs and economic pressure are effective tools of strategic containment. Markets may interpret these developments with caution. While talks signal progress, underlying fragility in China's economy could increase volatility in global supply chains and investor sentiment, especially in Asia-Pacific markets. Trump's rhetoric, whether accurate or not in scale, fits into a broader strategy of portraying economic decoupling not just as possible, but inevitable unless the terms of trade change. Speaking aboard Air Force One, former President Donald Trump declared that China has taken advantage of the United States for many years, pointing to what he characterizes as systemic trade imbalances and one-sided economic practices. Trump's remarks are rooted in long-standing criticism of China's trade policy, specifically persistent US trade deficits, intellectual property theft, and limited market reciprocity. This framing aligns with the nationalist economic narrative Trump has pushed since 2016, that globalization, as structured, has weakened America's industrial base while empowering strategic rivals like China. By reiterating this view while airborne, on one of the most recognizable symbols of US executive power, Trump adds theatrical weight to his message, reinforcing a zero-sum view of global trade. Strategically, the rhetoric serves to justify continued hardline trade measures and maintain domestic political support, especially among voters affected by outsourcing and industrial decline. The broader implication is clear. Trump sees no path to normalized US-China economic relations without a fundamental realignment of trade dynamics, one that reasserts American leverage and resets decades of perceived economic asymmetry. During his remarks, Donald Trump referenced the potential need for retaliatory actions against China, citing years of unfair trade practices that have disadvantaged the United States. The concept of retaliation fits squarely within Trump's doctrine of economic confrontation using tariffs, export controls, and restrictions on Chinese companies as leverage to counterbalance what he views as systemic abuse. Trump's reference to unfairness echoes US grievances, such as forced technology transfer, lack of IP enforcement, and industrial subsidies, practices that have repeatedly drawn criticism from US trade officials and Western economists. By publicly raising the prospect of retaliation, Trump is sending a signal to both Beijing and Wall Street that economic escalation remains an open option unless terms are rebalanced. This type of rhetoric can be market-moving. While it reinforces Trump's tough-on-China image domestically, it also injects uncertainty into global trade outlooks, especially for multinational firms dependent on US-China supply chains. From a broader strategic view, threats of retaliation aim not only to reset trade terms, but to pressure China into compliance with Western trade norms, positioning the US as an enforcer of economic rules-based order. A Bloomberg correspondent reporting from Hong Kong confirmed that both the US and China are showing signs of wanting to re-engage in dialogue, albeit with notable caution. This development, though subtle, marks a potential turning point in bilateral trade tensions. After months of hardened rhetoric, the mutual signaling of diplomatic intent could indicate a soft opening for negotiations. The caution, however, reflects entrenched distrust and unresolved structural issues. Neither side is moving quickly, and both remain wary of making premature concessions that could weaken their domestic or geopolitical standing. For markets and multinational businesses, even a hint of resumed communication is a relief, reducing short-term uncertainty and volatility, especially in sectors such as technology, semiconductors, and consumer goods. However, analysts warn that progress will likely be incremental and fragile, as both sides test each other's intentions while managing internal political dynamics. In broader context, these early signs of engagement may reflect growing pressure from investors and global partners urging Washington and Beijing to stabilize trade relations amid global economic headwinds. Last week, Chinese authorities indicated that they are considering the possibility of initiating new trade talks with the United States. This measured signal reflects a tentative shift in Beijing's posture, possibly in response to economic headwinds and heightened geopolitical pressure. Unlike previous assertive stances, China's current messaging appears more calibrated and strategic, aimed at keeping diplomatic channels open without committing to specific concessions. From a policy standpoint, this development underscores China's growing need to stabilize its trade environment amid weakening global demand and ongoing supply chain restructuring. Still, the lack of firm timelines or delegation announcements signals that talks remain in the exploratory phase, with both sides carefully managing domestic expectations. In the broader context, China's move can be interpreted as part of a damage control strategy, seeking to limit further economic fallout without appearing weak in front of its domestic audience. Despite recent signals of possible engagement, former President Donald Trump has clarified that he has no plans to speak with Chinese President Xi Jinping this week, emphasizing that both sides are still discussing different issues. Trump's remarks suggest that while diplomatic channels remain open, substantive gaps persist, particularly on priorities and negotiation frameworks. The reference to different issues may imply misalignment not just on tariffs, but also on areas like technology restrictions, national security, and fentanyl enforcement, a widening scope that complicates the path to consensus. Strategically, Trump's statement functions as a signal of continued leverage. By holding back direct talks with Xi, he retains negotiating power while projecting that the US is not rushing for resolution under unfavorable terms. From a broader geopolitical lens, the absence of top-level engagement illustrates the fragile state of trust between Washington and Beijing, a key reason why markets remain cautious despite earlier signs of thaw. In essence, without presidential-level momentum, working-level negotiations remain constrained. And progress, if any, will be incremental and tactical, not transformative. Negotiations between the United States and China remain stalled, as Washington refuses to unilaterally reduce tariffs, while Beijing insists on a complete rollback of existing U.S. duties. This deadlock reveals a core asymmetry in negotiating positions. The US views tariffs as strategic leverage, while China sees them as a legacy penalty that must be erased before any meaningful progress can be made. For Washington, conceding unilaterally could weaken its hand, especially with no guarantee of reciprocal action on technology, state subsidies, or intellectual property. From China's perspective, continuing talks under current tariff burdens undermines the principle of mutual respect, especially when tariffs were originally imposed without WTO approval. The stalemate also reflects deeper geopolitical friction, where trade has become a proxy battlefield for broader strategic rivalry between two global powers. In the absence of compromise, the tariff gap continues to inject uncertainty into global markets, disrupting supply chains and raising costs for businesses and consumers alike. According to the Wall Street Journal, Chinese officials are actively exploring what the US expects in terms of fentanyl-related cooperation, a sign that Beijing may be recalibrating its approach to a politically sensitive issue. Fentanyl, a synthetic opioid that has contributed to a public health crisis in the US, has become a non-trade issue with strategic weight in bilateral talks. China's inquiry into US expectations suggests a tactical opening. Instead of resisting outright, Beijing may be seeking low-cost diplomatic concessions in the narcotics space to gain leverage elsewhere, particularly on trade or tech. For the US, fentanyl is not only a public health emergency, but also a domestic political flashpoint. Any perceived cooperation from China, however symbolic, could be leveraged by US negotiators as a diplomatic win. Yet the move also underscores the expanded scope of US-China tensions, where even law enforcement issues are becoming bargaining chips in geopolitical negotiations. Markets are unlikely to react strongly to fentanyl discussions alone, but this development signals a willingness from Beijing to engage on auxiliary issues, which could eventually support broader de-escalation. China is reportedly considering dispatching high-ranking officials, including Minister of Public Security Wang Xiaohong, to engage in discussions with their US counterparts. This move, while still under consideration, would mark a significant shift in the diplomatic posture of Beijing, signaling that Chinese leadership is exploring dialogue even through its national security apparatus. Wang Xiaohong is not a trade negotiator, but a top domestic security figure, indicating that the agenda may center on enforcement, fentanyl, or geopolitical risk management rather than economic terms. This potential delegation suggests a calibrated effort by China to compartmentalize engagement, sending symbolic signals of cooperation without committing trade leadership. Strategically, involving Wang allows China to address high-stakes issues under a controlled, non-commercial framework, which may help reset tone without conceding on tariffs or IP protections. From Washington's perspective, such a meeting may be welcomed as a confidence-building step, but the absence of trade-focused envoys could frustrate expectations for economic breakthroughs. If confirmed, the decision to send Wang Xiaohong, China's Minister of Public Security, to engage with US officials would carry strong symbolic weight. Wang is a security figure, not a trade representative, which suggests that Beijing's priorities lie outside traditional economic dialogue. This would mark a deliberate attempt to reframe the narrative of China-US engagement, not as a trade negotiation, but as a security-driven exchange, focused perhaps on narcotics control, espionage concerns, or regional stability. The move may be aimed at demonstrating goodwill without exposing Beijing to economic compromise, especially given domestic sensitivities surrounding tariff concessions and industrial policy. From a geopolitical lens, deploying a security official in place of a commerce minister is not just symbolic, it's strategic. It signals that China seeks to compartmentalize dialogue and push back against full-spectrum pressure from the US. While the gesture may ease tensions on issues like fentanyl or cybercrime, it could also frustrate US expectations for tangible progress on tariffs, supply chains, or market access. Ultimately, the presence of a security figure at the table underscores how deeply entangled economic and strategic concerns have become, blurring lines between diplomacy, trade, and national defense. The choice to engage via security channels rather than trade envoys strongly suggests that China is intentionally narrowing the scope of dialogue to focus on national security topics, rather than pursuing a comprehensive economic negotiation. This strategic compartmentalization allows Beijing to control the narrative and reduce pressure on sensitive economic fronts like tariffs, intellectual property, and industrial policy. By directing talks through its Ministry of Public Security, China signals a willingness to engage, but only on limited state-defined terms, such as narcotics control, cross-border crime, or cyber threats. From a tactical view, this approach may serve two purposes. First, to present the image of cooperation to international observers. Second, to shield core trade and tech sectors from US demands. For the US, this narrowing may frustrate efforts to address broader trade imbalances or supply chain risks. It also highlights the geopolitical chessboard at play, where concessions in one area are bartered for silence in another. In essence, China's selective engagement signals that any future reset in US-China relations will likely be fragmented, issue-specific, and driven by strategic calculation, not mutual economic ambition.